Today, oil dropped nearly 10% in a very short period of time. Right after the news about the full reopening of the Strait of Hormuz, it looked like a complete breakdown. But what happened next is exactly why understanding order flow and volume profile matters. Because the market didn't just continue falling, it reversed very precisely from a key level, and it recorded this move live. Let's break down what actually happened. As soon as the news came out, we saw aggressive selling entering the market. Price dropped fast from around 87 all the way down to 79. This kind of move is driven by emotion, panic selling, fast execution, and weak hands existing positions. But at the same time, the market was approaching a very important zone. That level was last month's value area low, and also an untested value area low from a few weeks ago. So we had a confluence of support, not just one level but multiple layers of value. This is important because when price reaches a strong value area like this, we expect one of two behaviors. One, acceptance, continuation lower. Two, rejection, rotation back to higher prices. And this is where things get interesting. Watch this part carefully. Price reaches around 79 and this is where selling pressure peaks. On the 5-minute candle, around 7,000 contracts traded. Delta was about minus 700 to minus 800. This tells us something very important. Sellers were very aggressive, but despite that, price did not continue lower significantly. This is a classic sign of absorption. What does absorption mean here? It means strong buyers were sitting in the market absorbing all that selling pressure. So even though sellers were hitting the bid aggressively, someone was taking the other side. And then we start to see the shift. Selling slows down, price stops making new lows, delta starts to improve, buyers begin to step in. After that moment, we clearly see positive delta in the following candles. This is the transition from seller control to buyer control, and that's where the reversal starts. This is where most traders get trapped. They see strong red candles, negative news, high selling volume, and they think the market will keep dropping. But what they don't see is the selling is being absorbed into support. Smart money is not chasing the move. They are waiting at key levels like wall. The key lesson here is never trade based on news alone. Always combine one, a structure, value area low, point of control, value area high. Two, order flow, delta, volume, and the context. In this case, news created the move, but the structure defined the reaction. So what we see today was very clean. Price dropped aggressively, reached a high probability support zone, sellers got absorbed, buyers stepped in, and the market reversed from the exact level. This is not random. This is how professional trading works. If you want more real market breakdowns like this, make sure to subscribe and tell me in the comments, did you catch this reversal or did you get trapped in the sell off?